Do you think €100 a month isn't enough to invest? Wrong. Even with such a small amount, you can build real wealth over time. Many believe you need thousands of euros to start investing in the stock market. But the truth is, with just €100 a month, you can gradually create a solid financial foundation. The key is consistency and compound interest. Imagine setting aside €100 every month. To many, that may sound small, like a drop in the ocean. But the real power lies not in the size of the amount, but in the consistency. Month after month, you build a foundation that can become incredibly strong over time. Compound interest is your best friend. Many underestimate it because it's invisible at first. In the early years, your wealth grows slowly. But over time, the snowball effect kicks in. €100 per month equals €1,200 a year. If you invest that with an average return of 7%, your money grows not only from your deposits but also from the profits that generate even more profits. That's the magic of compounding. A concrete example: you start today and stick with it for 30 years. In the end, you will have invested €36,000. If your money earns an average return of 7%, that sum grows to over €120,000. That means almost €85,000 doesn't come from your own pocket, but from the returns that accumulated over time. Your money works for you, day by day, year by year. And that's the difference between saving and investing. If you just put €100 in a savings account, you'll earn a few cents in interest, while inflation eats away at your money. If you invest that same €100 broadly, for example in ETFs, you benefit directly from global economic growth. Companies around the world develop new products, increase sales, and generate profits. As an investor, you share in this growth. Think of the process like a workout plan. On the first day at the gym, you see no change. After a week, your body looks the same. But after a year of consistent training, you start seeing muscle. After 10 years, you're fitter than most people around you. Investing works the same way. Small, regular contributions deliver the biggest success in the long run. Many fail because they're impatient. They expect huge results after a year. When that doesn't happen, they give up or constantly change strategies. But the secret is persistence. Compounding shows its full power only after many years. If you start today with €100 and stick with it, in 30 years you can look back at wealth that gives you security and freedom. Some ask, is €100 even enough? Of course, it's better if you can invest more. €200 or €300 speeds up the process, but even small amounts are valuable because they build the right habit. It's less about the sum and more about building the routine. Once set up, your investment runs automatically. Your money quietly works in the background while you live your life. In the end, it doesn't matter how much you can invest at the beginning. What matters is that you start. €100 today is better than €500 in 5 years. Compounding rewards those who start early and stay consistent. With that mindset, €100 a month is more than enough to build long-term wealth. So, where should you begin? The simplest way is with ETFs, exchange-traded funds. Sounds complicated, but it's simple. An ETF is a basket of many stocks or bonds, traded on the stock market like a single share. With just one purchase, you invest in hundreds or even thousands of companies. ETFs are cheap, simple, and diversified. You don't have to decide whether Apple, Microsoft, or Tesla is the better choice. With one ETF, you own a piece of all of them. If one company struggles, the others balance it out. A classic is the MSCI World with around 1,600 companies from 23 countries, or the All-Country World Index, ACWI, which also includes emerging markets, giving you global exposure. For beginners, this is ideal because you don't have to constantly pick stocks. Even professionals can't predict which stock will perform best in 20 years. An ETF makes that decision for you. Instead of betting on one company, you bet on the entire economy. And the economy almost always grows in the long run, despite crises and setbacks. Another advantage, ETFs are extremely cheap. While traditional funds often charge 2% a year, ETFs usually cost under 0.5%, some even below 0.2%. That sounds small, but over decades it adds up to tens of thousands of euros. Always check the cost ratio, called TER. The lower, the better. How do you buy an ETF? Through a broker, an online platform where you open an account. Many brokers offer ETF savings plans. You set it up once and €100 is automatically invested every month. From then on, it runs on autopilot, just like a standing order. Important, watch the fees. Some brokers charge a few euros per purchase, others offer free savings plans. With small amounts, every euro counts. Choose a provider with low or no fees for ETF savings plans. In summary, ETFs are the best way for beginners to invest worldwide with little effort and low costs. With just one product, you spread your money across the global economy, benefit from growth, and can start small. Simple, efficient, and long-term successful, exactly how your first investment should look. So how do you get started? First, choose a broker, like Trade Republic or Scalable Capital, and open an account. Then set up your savings plan. Set the amount to 100 euros a month, pick an ETF like the MSCI World or ACWI, and let it run automatically. From that moment, you're investing regularly, stress-free and without emotions. That's the big advantage. You don't need to guess if today is a good or bad time. Your plan buys automatically, whether prices rise or fall. Sometimes you buy high, sometimes low, but in the end, you get a fair average price. That's called the cost average effect. And the earlier you start, the stronger compounding works. If you begin at 25, you're well set by 55. If you wait until 35, you miss 10 years, and those years make the biggest difference. So don't wait. Start now. Just avoid common mistakes. Many buy too many single stocks and put all their eggs in one basket, or they stop their plan when prices drop. Both ruin the long-term effect. Impatience is just as harmful. In the first years, progress looks small, but after 15 or 20 years, the turbo kicks in. Then your wealth grows rapidly because profits generate more profits. Quit too early and you'll never see that effect. Investing isn't a sprint, it's a marathon. It's not about quick wins today, but about being financially secure in 20 or 30 years. If you avoid mistakes, stay consistent and have patience, your 100 euros a month can grow into a large fortune. In the end, it's simple. Pick a low-cost broker, set up an ETF savings plan, and let it run. In the description, you'll find links to brokers and examples to help you get started. And if you want more tips like this, subscribe to the channel so you don't miss a video. Important note: this video is not financial advice. It is for information and entertainment only. Investments involve risks, so please do your own research before making decisions.